Are we actually seeing a recovery, or is this just a dead cat bounce? Let's talk about it. Welcome, my fellow traders. You are on the Riz International Weekly Market Recap webinar. I want to thank everybody for bearing with us over the last couple weeks. Obviously, we haven't had a webinar, but we are back up and running and ready to go. Last weekend, of course, was the July 4th holiday here in the United States, and so we decided to go ahead and take that long weekend, enjoy our time off. And actually, the week before, I was actually participating in a parade. So, you know, it's one of those things where I can't be in two places at once, sadly. So I appreciate all of you bearing with us on that, and let's get back to it. Let's see what's been going on. So, you know, quite the rollover here. You know, in the middle of last month, in the middle of June, and we really kind of came down here and started getting really close to that 3,600 level, but we didn't quite make it there. It looks like we bottomed out here right around 36,87 on the S&P 500, and we've somewhat bounced from there. Now, there are two schools of thought in how to look at this and say, okay, well, is this just a, you know, a slight little bit of a recovery rally and then we continue to the downside, or are we actually in an uptrend? Well, actually, let's take a look at that, honestly. You know, if you look at this shorter time frame, then yes, you could say that we are in an uptrend. We're making higher lows and we're starting to push higher. But if we look at the overall, you know, trend here on the S&P 500, we are still currently in a downtrend right now. Now, that doesn't mean that the market can't push through this and continue up on Monday, but I will say that this hold of 3,900 as resistance is not necessarily a good thing for that recovery to continue. Plus, there was the breaking news over the weekend that Elon says that he wants to get out of the Twitter thing, and that may freak people out. It may not make any bit of difference in the market, but it is a catalyst that we need to keep an eye on. One thing that I'm watching, to be honest with you, is this level here where we hit before, where we got to about 39.50. It's technically 39.45. Right now, we have not made a higher high at this point. You know, we had this huge drop in the middle of June. We made a bounce and we came back down, and now we didn't make a lower low, but we are starting to push back up. If we can't make a new high off this, that to me shows a lot of weakness in the market. And we were not able to get the push up on Friday like a lot of people were expecting, and we did close, just like I said earlier, just right below that 3,900 level, which shows you that these levels do hold some statistical significance. So we are keeping an eye on that. Obviously, there's a lot going on around the world. If you live in Canada, I'm sorry that yesterday about 70% of you were not able to use your cell phones, with the Rogers net being down for most of the day. I know a lot of our Canadians are still without coverage at this point, and they're of course looking into that, so I do hope they get that fixed soon and you can get back to your daily lives. But there have been a lot of questions surrounding that and a lot of things going on in the overall world in general. So there's a lot of negative pressure right now on the market that's kind of pushing it down, and we're kind of seeing that with this test of 3,900 and a pretty much a failure. We didn't close above it, we closed below it, and so this is going to be an important area for the S&P 500 to see on Monday if we can make a new high. That would be suggestive that we actually are switching trend and we are moving towards an uptrend. Maybe we see more recovery. But, you know, the truth is we could come back up to this area here around 42 and we could reject off of that again. So we'll have to keep an eye on things. Right now, this is my overall downtrend line at this point. That is, you know, the 200 simple moving average is curling down right now. And, you know, it's right there following my trend line here. We'll have to see if that holds, but it's going to be, I would honestly say it'll take several weeks. If we're in a solid uptrend, it will still take several weeks to get up to this line and see if we can test that again to really say if we've changed trend. Now let's take a look here at the S&P 500 breakdown for the 5 different sectors that we are keeping an eye on, 6, because counting is hard on stream. So right here, this gray line here is the 0 line, and you'll see that the only thing that is above the 0 line right now is energy. And with the price of gas and other things related to energy like natural gas, coal, solar, things like that, energy's up right now, and I'm sure that we're all seeing that, not only at the pump, but in our bill as well every month when we have to pay for that electricity, gas, and whatever other methods you use to heat your home or where you live. Energy currently up 24% on the year from the day we started on January 1. The S&P 500 itself, represented by the SPY ETF here, is down 18.64% on the year. So definitely a very bearish market right now. Technically, I don't think we're in bear market territory, but we're pretty darn close. We really have just been kind of hanging around that bear market area for quite some time. But let's see here. Yeah, so technically not negative 20% from the highs. So we're technically not in a bear market, but it looks pretty bearish if you ask me. Everything else is below the zero line. Utilities is holding pretty close to that zero. Healthcare is perking up a little bit, looking negative 6%, and financials, real estate, and tech are all underperforming the S&P 500, with tech leading the way, down almost 24%. So this has been kind of the story all year. That really hasn't changed too much. And taking a look at the oil here, we've had definitely a bit of a reversal. Now, we kind of came up here and tested this 124 area, and we were not able to hold it. Rolled over pretty nicely from there, broke through this ascending, support zone here that I had drawn. We'll just go ahead and take that off for now. But we are still holding above this 93.67 interim support area here. So we kind of came down here on the 6th. Tested it pretty closely. We got down to about 95, and it has bounced up from there. So we're still maintaining that over $100 per barrel in oil, which, as Riz has talked about, is pretty much the top of the level. The U.S. economy is not made to be running on $100 per barrel oil. So we're going to have to see how this plays out, but obviously things going on in Eastern Europe will play a big part in that, as well as the things going on in Iran, Venezuela, and the other oil-producing countries at this time. Gold rather, been taking an absolute beating over the last couple of weeks, the end of June going into July. Gold absolutely tanking down here, closing right at $1741.80 per ounce. Definitely a big rollover here, but still inside our channel. And, this channel has held true for quite some time, since, mid 2020, basically. This support zone here at around 1680, pretty solid. So I wouldn't be surprised if we see a push that direction. Things keep going as they are and inflation keeps doing what it's doing. I think we could see that 1680. We may see another test of that, and we'll see if that continues to hold. But gold definitely taking a bit of a hit here, as it had been consolidating to the right for quite some time, since about the middle of May. Really not much movement in gold at all, but definitely some movement here at the end of the week. Taking a look at cryptocurrency, crypto obviously took an absolute smashing over the last few weeks. We've talked about that in our Elite chat if you are an Elite member, and we continue the downtrend here. We have tested 20,000 multiple times on Bitcoin, and it has pretty well held at this point. So we'll have to see what happens if we continue to consolidate here, or if we start taking another leg down. Now, I do know that Riz got in and got out of Bitcoin pretty quickly this week and made himself a nice little profit. So if you are into that sort of thing, definitely something to keep an eye on with Bitcoin, because there's going to be, I think, more movement here fairly soon. I think we should probably see some more action in the near future on cryptocurrencies, but everything else for the most part is following suit with Bitcoin. Not necessarily that you can lay them on top of each other, but pretty darn close. Let me go ahead and switch back to this view here and take a look at our trades that we took. All right, so we haven't played a lot of securities specifically as of late because of all of the uncertainty in the market. It is very tricky right now to trade, but one that we did get in at the end of the month was Google. And let's see, we got in on this one at 22.67, and this one has been playing out very, very well. I was gonna say this entry is pretty much spot on by Riz. Got in on the 28th on this candle here, it looks like. Yep, so this candle here Got in on this rollover, held through this, and a very nice bounce here on Google, otherwise known as Alphabet Incorporated. A very nice push towards the upside here. So if you're holding that one, good on you. Obviously, a $2,000 stock is difficult for a lot of people to trade, but if you do have access to that type of capital, then you should be in good shape. Looks like we have a split upcoming, so that may mean that Google becomes more accessible to people. Yeah, so a 20-to-1 split. So should definitely see some movement in Google here fairly soon, and a little bit more reasonable prices so that normal folks like you and I can get into these sorts of things. But being very, very careful with our long plays as of late with all of the downward pressure on the market. It's just very difficult to take stocks long when you're in a very hard downtrend like this. Again, this is something that is necessary. It is normal, and it is something that has, in my opinion, been way overdue. We'll have to see this week if we can push through 39 and then up to 4,000. 4,000, I think, will be a big area of a lot of buying and selling going on as well. You know, we see the 50 crashing down here. So we'll have to see this week where we go. But I want to go ahead and open it up to questions for anybody here on the live call. I want to give you that opportunity to go ahead and throw your questions in the chat. We can talk about it live. But, you know, the old adage, buy low, sell high, very, very important. And to buy low, that means that things have to go down. I know that that's sometimes difficult to stomach because, you know, you're holding things long and maybe now you're in it for a while. But that being said, if you have a longer time horizon on some of these plays, you should be doing just fine. Matthew wants to take a look at ATZ. I'm not too... You want it on the TSX? On the Canadian exchange? Yeah, okay. So this one I'm not too familiar with. I have not traded this one myself, but let's just kind of take a look here. Looks like it's following the market fairly closely. Obviously, this is a Canadian stock. So let's see here. Okay, so we definitely have some pretty solid support down here in that area. Beautiful. So yeah, that 32 area seems to be pretty strong. Looks like we gapped up on earnings. Earnings looked pretty good, but then we had a bit of a sell-off. But we are holding here. If you're looking to take this one long and the market continues to move upwards, it could definitely work pretty well for you. Let's see. So not a bad beat by about 5 cents. So about a 16% beat on EPS. So you can't beat that. Revenue looks to be up as well. This actually looks pretty tempting. We held the 50 here, which is a very nice sign. So that could start acting as support for us. Looks like we've been up in this 40 area before, but that does give you a little bit of room. You got about at least $2 before you get back up to 40. This could be a very enticing long play. I'm not going to lie. It does look pretty nice. I kind of like it. I'd have to research it a bit more to kind of understand what it is that they are and what they do. But it seems as though they like beating earnings pretty well. I'm seeing a lot of green earnings things here. When's the last time they missed earnings? A long, long time ago. So this company seems to be doing pretty well for itself. It seems to have benefited from this nice big run-up in 2020. So that definitely pushed it higher. But yeah, that 32.65 area seems to be pretty important. Canadian retail, okay. Got it in your long-term account. All right, well, that seems pretty solid to me, especially with that nice earnings result, even in these troubling times. Making it big in the U.S. Okay, well, that's definitely a plus, to say the least. So I like it. I like it a lot. Depending on where you got in for your long-term hold, you could be holding, you could be in a pretty good spot. If you're kind of got in up higher here, might be a decent time to go ahead and average in a little bit. Early 2021. Okay, so you're doing just fine. Yeah, you're doing great then at this point. Even with this downturn, you're still looking pretty good. And earnings were positive, obviously, so that's nice. So I don't see any reason why you shouldn't hold. If they're doing very well, you know, in the United States as well as in Canada, then no reason to let it go at this point. If you have conviction in the trade and you want to see it through, then I would have no problem holding longer on this. Yeah, I think the tricky thing right now is being patient. And I know I've talked about this before, and I know I feel like I'm kind of beating a dead horse a little bit, but I think it bears repeating at least one more time. When you're in really bearish markets, it is very tempting to just jump in on something and overtrade and then wonder why you're losing money in your trading account. And so the one thing I want to close on tonight is, unless we have any more questions, is to be very cautious with your trades moving forward, especially your long trades. Okay, so Matthew wants to see you. If I'm not mistaken, that's you. Okay, Unity Software. Okay, so it looks like they've been beat down a little bit. Haven't been around for too long, but yeah, we're currently below the IPO price right now, but slightly up. I wouldn't be jumping in on this one just yet. If you're looking at more longer term, then I think it would be fine. This could be a fine entry point for you if you don't have, you know, if you're not looking to swing it, if you're looking to more play this long term, because I know you said earlier you were looking at your long term account. This could be a good entry point for a longer term hold if you believe in it. I know Riz is more familiar with this company because we've looked at it before, obviously, since I have my lines on it. But yeah, obviously it's suffered from the rollover in tech. Even though earnings were good here, it gapped down. I see revenue was down, but not too surprising. Yeah, I mean, long-term hold, I would be okay with it. This looks like a pretty decent entry point, especially if it makes it back up here towards the 100 area. That would be pretty solid for you. It'd be a really nice trade. But it may take some time to do that, especially with current market conditions. But if you've got spare capital and you can buy and hold, then it could definitely work for you. But I don't know if it's going to work in a short term as far as a swing trade is concerned. Realistically, what sort of time frame are you thinking before we see PayPal and DIS, so Disney, and other similar stocks we deal with start showing some strength? Well, let's take a look. All right, so PayPal has been absolutely smashed, you know, as of late, and it's not looking up at the moment. I think it's going to be a little while before we start seeing a really solid move back towards the upside on PayPal. To be honest with you, it could take a while, and I know a lot of people are in on this, and they have been for some time, and I know a lot of people's accounts are hurting because of this, and you don't need to apologize for multitasking. It's always a good thing to do. Right now, it looks like we're just kind of following the 50 a little bit. That's acting as some, you know, shorter term resistance here. So before I'm ready to call a recovery, I want to see it push through that 50 and start moving towards the upside more. Realistically, how long is it going to take? It's anybody's guess at this point. You know, the market could turn around tomorrow, and this earnings result here in, you know, August could be spectacular, and we could see it push back to 120. It could also stay down here in the doldrums in 74 range for a while. So it is very frustrating. I understand that, you know, we've been bag holding this one for a bit, and it just feels like more and more bad news for PayPal. But you know, earnings were pretty solid. EPS was good. You know, revenue is good. So there's really not a reason why it should be this low, other than it's just been beat down and the market is holding it down as well. So realistically, I think we may see at minimum a few months before this thing really starts to kick off, and it'll need the market to help it. Is really the answer. Now let's take a look at Disney. Disney is in its own trouble, especially in the state of Florida itself. I know that the revenue off the new Lightyear movie was pretty bad. It was a little too woke for most people, and I have no problem saying that on webinar. You kill me in the comments if you like, but you know, it was. I went and saw it. I thought it was a cute movie, but I did notice a few things that I thought people might be a little bit upset about. And, you know, Disney has kind of, in my opinion, lost itself a little bit. And so I think it's going to take a little while for Disney to start curling back towards the upside. Again, current market conditions are really hammering Disney as well. So that doesn't help. But, you know, they've got some internal stuff they need to deal with. If I'm not mistaken, Florida took off some tax benefits that they had. So that's going to affect the bottom line as well. So Disney has kind of backed himself into a corner right now, and it's it's difficult for them. So again, I think we're going to see at minimum it'll take a few months, if not, a little bit longer. But again, we don't know what happens on Monday. The market could open strong. We could just blow through all of these, resistance levels within a month, and we're back on track and we're looking more towards the upside for the market as opposed to the downside. So and when that happens, then it'll take Disney with it. It's one of those things that these larger companies that we're dealing with here will often trade next to the market, not necessarily in parity, but general trends will be the same. And you can see the strong downtrend here since November on Disney. But I think Disney is going to be a harder sell in my opinion. I think PayPal has a better chance of curling upwards sooner rather than later as opposed to Disney. I think Disney's got a lot of skeletons in its closet that needs to clear out. And I hate saying that because, I have so many fond memories of Disney when I was a child, how, it was wholesome and I'm not saying that they're doing anything wrong right now, but there are a lot of people that disagree with the direction that the company's taking. And so that's something you kind of need to take into account. Now, is Disney going anywhere? Don't think so. Pretty sure they're not going bankrupt anytime soon. And, if Mandalorian Season 3 does well and some of their other series do well, it could definitely help push, Disney Plus revenues, which could in turn help things curl towards the upside. Now, if I'm not mistaken, I think Mandalorian's due out in, later this year? I thought I heard like December or something like that. I'll watch it. Yeah, I'll be honest with you. I thought the first 2 seasons were spectacular. So, they said the guy who plays, Din Djarin, he hurt his back on set because he was, carrying the entire franchise. It's one of those things where it's like they're kind of having to hang their hat on that, and we'll have to see how that goes. But I don't know how the new Thor movie is doing. I've heard good things, but we'll have to keep an eye on it. But again, I think with the market being down and some of their other series and things like that not doing so well, it's going to be tough for Disney for a while. Again, that's just my opinion. The market may have a different opinion, and we could see, a nice upswing here in the next couple weeks. But I think until we get a strong direction in the market that's not down, I don't think Disney's coming back anytime soon. I think it'll stay down here for a little bit. Again, I think that's just my opinion, but I think PayPal is going to be heading north sooner than Disney will. Great questions, though, and some very interesting tickers to look at. I want to make sure we keep this under half an hour because I value your time, and I of course value everybody here who is on the live webinar. Thank you so much for being part of Riz Elite. I know it's been difficult the last couple months, but trust me, stay the course, and you have that treasured dip buy list, so don't hesitate to use that when we get to those support areas which we've talked about in Elite. That's a good time to jump in, and that's the real benefit of being an Elite member is you get live access to not just me but Riz and all of our other trading team members. We're all here to try and help you learn how to trade better. Don't hesitate to reach out to us. We're more than happy to talk with our members and help you become a better trader. So I hope you all have a great rest of your weekend. Rest up, be ready, and we will see you in the market on Monday.